This is the Voice for Real Estate podcast. Whether you're buying a home, building a home, or designing a home, you'll meet the local experts who can provide all the information you need in every episode of Voice for Real Estate. And be sure to subscribe, share, and comment so you don't miss a single episode of Voice for Real Estate.
Here we are for another edition of Voice for Real Estate. And I got to tell y'all, I'm excited today because I have a friend of mine, plus he's a very, very knowledgeable mortgage banker. And we're going to talk to Jules Deas III. So Jules, thanks for joining us. And Jules is the Vice President of Sales for Mortgages in the Charleston area for South Bank. Is that correct, Jules?
Yeah, for South State, kind of describe myself as a player coach, originally loans personally, but also help the rest of the team. We have about 10 originators plus me.
How long have you been doing it with the bank?
I've been in the industry. It's all I've ever done. Got out of college and worked as kind of a personal banker and branch manager, then moved into mortgages in 2010. Been with South State about 2 years now, which has been great.
I want to talk about you a little bit because your family, you have such deep roots here. So
Sure.
How many children do y'all have and what's their ages?
Yeah, it's super cool to connect with you, Bill, because we do know each other a little bit outside of this. And yeah, the kids, I've got 3 kids now. Janie, my oldest, just turned 10. I've got Jules the IV, believe it or not. Cursed him with that unique name that everybody's going to mispronounce and make assumptions about. And then we've got a third, another girl, Helen, bringing up the rear. She just turned 3. So busy.
That's
busy
great.
days.
How does it help you to connect with your customer base because of your deep roots and your familiarity with the region?
We joked the other day, it's seemingly more and more rare that you come across somebody that, grew up here and is still here. And I'm certainly grateful for all the people, coming and growing this economy. But Mount Pleasant, having been born and raised here and moved back, it's, a very different place today than it was, 20, 30 years ago in a lot of good ways. But yeah, my dad, who obviously shares my name with me being a third, was in real estate in various capacities as I grew up. So, as I really didn't know what I wanted to do exactly after I got out of college, ended up going to work for a bank and then kind of falling into the mortgage side with just people that I worked with. It was kind of a happy marriage of, I get to kind of do what my dad did. Like I was always interested in houses, neighborhoods, renovations, land sales, things like that. But kind of from my own side. And I feel like while there weren't a ton of people that necessarily were like, I'm going to, start working with Jules because I know his dad, I think that probably helped me stand out, that people either knew somebody in my family or knew dad from, real estate and, maybe me and the other 100 people knocking on a realtor's door, maybe I was slightly more remembered and got a little bit of a leg up.
Let's get started on some of the numbers, crunching some things here. And let's start with the migration to the South, July 2020. And we're putting this graph up for the YouTube viewers. And this is amazing, dude. Isn't this amazing how many people came here?
It's really cool. And I'm pulling it up so I don't misquote a number. So yeah, this was part of our investor presentation, really to talk about, South State in general being well positioned, but it's not necessarily related only to banking or only to mortgages. It's some pretty compelling numbers when you see 657,000 people moved into that area that they've labeled the South, basically Texas to West Virginia to Florida, and every other region has seen a decrease, right? And, some of that was through the proliferation of, work from home and, people realized that they could go to a better place, for whatever reason, like better weather, more reasonable quote prices. We forget that, even though folks like you and me have been in Mount Pleasant a really long time and might look at some of these prices and say, wow, they're high. A lot of what we have here in Charleston is a relative bargain, compared to where people are coming from, both on sticker price and also, with property taxes and things like that. I talked to somebody from Maryland that, essentially was going to be paying $800 less a $1 million home down here than he would have paid for $1 million home up there. So, with that transitioning kind of work environment, we certainly saw a ton of growth, and that makes our market unique. And you really have to keep these things in mind when you read things like national headlines.
Be part of the conversation surrounding Mount Pleasant. Sponsor the Mount Pleasant Podcast. Podcast marketing is the new, powerful way to brand your business and reach your customers. For more information, visit carolinapodcasts.com or call 843-345-7012.
You're listening to the Voice for Real Estate podcast, a conversation about coastal Carolina real estate.
We know what it's done to the real estate industry. I mean, you live and breathe it. But what did that impact of this migration? What did it do to the mortgage industry?
It seemed like, you'd wake up every day and you'd have a new person move in here with low rates and things like that. It was kind of, the market was crazy busy in a great way for realtors, lenders, and everything. It did, make things hyper competitive, right? Because it's all about, supply and demand. I don't care what business you're in. It eventually all comes down to supply and demand. And, we hear all these anecdotal things like crazy offers over list and things like that, and just hyper competitive for buyers. So, in a way, that's great, but in another way, it's kind of a silver lining of a recent perceived slowdown, right? That it's getting to a more balanced market that's more manageable for buyers and things like that.
Did it put more pressure on you, because the realtor depends on you to help that deal happen? Mm-hmm. So did it put a lot more pressure on you as it did the buyer and the realtor?
Yeah, time is money, literally and figuratively. Like if you have a client that's wanting to make an offer, it became almost a cliche, like, oh, an hour after something hits the market, you got 10 showings and 3 offers. So, really kind of had to put in some crazy hours to support our realtor partners and everybody else out there, and everybody in our industry. Realtors were working crazy hours, lenders were, attorneys, insurance people, everybody kind of had to be on their toes and ready at a moment's notice to help out, for sure.
I want to focus on the Carolina coasters for a second. I've always felt and learned over the years that our area, our region is a bit isolated versus the other regions in the country. We live in a more positive bubble, I think, when it comes to the things. Do you concur with that? And if so, what's the biggest difference?
Definitely. I tell people, clients all the time that are reading headlines, right? So first thing about headlines is, a pretty boring and vanilla headline isn't going to get any clicks, right? It's just like, whether it's politics, real estate, anything, the headlines out there are going to be skewed one way. You'll see something like rates plummet and, they may have gone down an eighth, or, rates skyrocket and they go up a little bit. So take any headline with a grain of salt, because, the goal is to get clicks, right? But also, if somebody's sitting in Charleston, South Carolina, reads an article that, either positive or negative nationally, that may not be, relevant or applicable as much to Charleston, South Carolina. And, a realtor that I sat with recently said, even within Charleston, there are all these micro markets, right? There might be, an area in Mount Pleasant that's very different right now than Daniel Island or Somerville or Johns Island. So, super important. I see what comes across my desk, obviously, and my clients, but to be able to partner with a really knowledgeable real estate agent is huge, because our market, to your point, is different, I think. How many times have we been named, number 1 or number 2 city in the US or world by Condé Nast or every other publication? We've got so many good things, a more diverse economy here than we had when I was growing up, a lot of good manufacturing stuff, the port, obviously big, and, people just want to live here. Historic city, excellent culinary scene, like what's not to like? We're lucky to live here, man.
In any industry, when things become a challenge, that's when the entrepreneurism comes out and people start getting creative, right? So sure. In your industry, what's happened now that the mortgage rates have climbed a little bit? How has your industry, the mortgage industry, gotten more creative in their different programs?
A few things have kind of come back around. The old cliche, like what's old is new again. In the hyper low rate environment that we were in for several years, 30-year fixed was almost like free money, felt like it, right? So, but now when there's a consensus or a feeling, and nothing's guaranteed, of course, but there's a thought right now that this elevated rate environment is temporary to some degree, right? Depending on what you read or what you see, there's a lot of expectations that sometime over the next 6 to 24 months, rates are going to come down for a variety of reasons. And again, never guaranteed, but that thought has made adjustable rates more popular again. And they're really good solutions for the right buyer.
What kind of programs does South State have for somebody in this market right now?
Yeah. So, I mean, right now we have portfolio lending in addition to kind of all the normal stuff.
What does that mean? What does that mean?
Yeah. So a little more flexible than kind of the fit in the box Fannie Mae, Freddie Mac, VA type stuff. More flexible in guidelines and rates sometimes, with 30-year fixed, with adjustable and things like that. And one of my colleagues said it really well. Our portfolio is not a place where we put, quote, bad loans, right? But we put good loans that might have a little wrinkle that, with all of the rules that were instituted, 10, 12, 15 years ago, somebody that's a great buyer that is going to pay that mortgage every month might have a challenge to approval, whether it's self-employment, whether they have a house they haven't sold yet that they're going to sell. We can get a little more flexible. Again, we have to keep it within guidelines and things like that, but sometimes we can exercise a little more common sense.
So these are loans that South Bank holds?
Yeah, we do keep them on our portfolio. It's kind of what I tell people. It's like old school banking, right? It's our money. We set an acceptable rate for the risk that we're taking. We're not necessarily beholden to, pricing on the bond market that moves like a Fannie and Freddie thing. So, again, we have compliance and guidelines that we have to hold to, but a little bit more wiggle in there for the right client and for the right relationship.
So sure. What other programs would somebody be interested in knowing that you have?
Temporary buy downs are making a big comeback. And the general idea there is, a good example that I said recently on something I posted. If a seller's looking to make a deal with a buyer, they could look at cutting their sales price, let's say $8,000 to $10,000. Well, that's great. And the seller gives up $8,000 to $10,000, but that may only change the buyer's mortgage payment by $50. It's not a huge needle mover in terms of a monthly payment. So one thing that's picked up steam that's, again, kind of an old strategy is a 2-1 buy down. And the general idea there is the seller may contribute, a similar amount of money, let's say that $8,000. There's a scenario I looked at earlier where them contributing that to buy down their rate a full 2% in the first year was saving like $400 a month, and then $200 and something a month the next year. So, in this environment where, again, there's some thought out there that rates may be better at some point over the next couple of years, that gets a buyer in, without the seller giving a huge concession, but really helps that buyer over a year or two with the hope that, hey, worst case scenario, I've still got a fixed rate in year 3 and beyond, but I may have a refinance opportunity within the next couple of years. And that's when
I agree. I think the refinance part of your industry will come back with a vengeance, actually. Mm-hmm. If I wanted to go right now and buy a $750,000 house, what would you say the first thing I should do when it comes to mortgages?
Definitely, whether it's, somebody on my team at South State or any of the other great banks and lenders we've got in this region, certainly everybody has something different to offer. Get with a lender first, get pre-approved, make sure that, you're qualified. Sometimes people have a little bit of a surprise on their credit, like a medical bill that popped up they didn't know about, something we can fix if we have time in advance versus, hey, calling the morning of like, oh, I want to go make an offer on this house and then get a surprise. But almost as importantly, making sure, because the rate market's been so volatile, that the payment that you have set aside for your budget that you're comfortable with lines up with kind of the sales prices you're looking at, and consider all of those options. For some people, a 30-year fixed is going to be the right option. For some people, an ARM is going to be the right option. There's so many different kind of avenues out there where we are really being kind of challenged again to be better advisors and consultants versus, a couple of years ago when rates were just crazy low, people would be like, oh, okay, well, I'll go here and get this. this or here and get this. There's a lot more nuance to it and a lot more options out there.
When would you suggest a 15-year mortgage versus a 30-year mortgage?
I think it just depends on somebody's monthly payment goal and their overall financial picture. I mean, there's something to be said for getting out of debt quickly. And it's amazing to have a home free and clear if that's the ultimate goal. I typically am a fan of, doing a 30-year fixed if the rate isn't significantly different and paying extra. I always tell people that way you can always take your foot off the gas if you need to, if something else happens, if you reprioritize your goals. But a 15-year, if somebody's completely comfortable with the payment and, isn't going to blink at it within their monthly budget, that helps them stay disciplined and pay that off. Whereas, if you do the 30 with the intention of paying extra, sometimes maybe you don't, right? So the short answer to that question is, if it gives you no heartburn over that monthly payment and your goal is to get out of mortgage debt as quickly as possible, that makes sense. Typically, mortgage debt's going to be among your lowest debts. So if you have other debt out there, cars, student loans, things like that, I'd probably focus on that stuff first. But again, within the budget, 15-year will get you free and clear quicker.
Say that I wanted to get a mortgage down here, but I had my house, still had it for sale up north somewhere. Can I get a mortgage with your bank or with another local bank? Like you said, there's a lot of good ones around here.
Yeah.
But and then when I did receive the money from the property up north, pay down the mortgage. And what's that called again?
It's called a recast.
Okay.
And basically, so a lot of people aren't aware that they think they have to refinance and they go through another set of closing costs, documents, all the kit and caboodle, right? But the recast essentially, and there are some parameters around it that differ on the type of loan, but in general, if you're making a sizable payment, in our rules, it happens to be $10,000, right?
And your bank is, I guess each bank has a different level.
Could. Yeah. So our minimum is $10,000. So it needs to be kind of a substantial pay down. I joke and tell clients, we don't want you to recast your loan every time you pay $100 extra and, decrease your payment by $1. But, in your example, somebody, maybe in a competitive market, the seller doesn't want to take a contingent offer on selling the home. If you can come up with kind of a minimal down payment, secure the house, and then sell after the fact, you might take a lump sum, maybe it's 20 grand, maybe it's 300 grand, but you pay down that loan and then we can re-amortize the payment. So in other words, your initial payment and what you would have to qualify for would be that full amount that you borrowed in that monthly payment, right? But then if you make a significant pay down for typically a small administrative fee, like $250, $300 kind of thing, banks and lenders will then re-amortize that payment and say, okay, you've got 29.5 years left on this loan, but now your principal balance is here. Let's redo the payment there. And a lot of people do that for that exact scenario that you talked about, buying and selling where there's a little bit of an overlap.
Do most realtors know that?
I hope that a lot of them do. We do talk about it and certain ones do, but they're focused on their end of the business a lot of times. And it's up to us to educate all of our great partners out there.
If I'm looking for a mortgage banker, okay, what would you advise somebody to look for?
I think the same things that you would look for in any trusted professional, honesty being paramount, experience in the industry, and, just somebody that you enjoy and trust that has your best interests in mind.
A survey was done by the National Association of Realtors, and I couldn't believe these figures, but I was a little bit surprised, but honesty, integrity was almost equal to knowledge of the marketplace.
Yeah. Yeah.
So is that true with mortgage bankers too, to some extent?
I would certainly think so. And, a lot of the good bankers out there will always do what's right for their client, even if it means that they don't have the right solution, right? Like I tell people all the time, we have a lot of good products and I think we'll deliver great service. But every now and again, somebody's just not a fit, whether it's the program they're looking for or whether we're not the sharpest on rate that day. I always tell people, listen, I'll be honest, if we're not the right fit, I'm not going to try and put a square peg in a round hole. I tell people I may not get your deal, but you might send me 5 friends and say, this guy's really honest and everybody wins. And
doing the right thing always pays off. Doing the right thing and being positive are two things that always pays off. Through your eyes, since you look at mortgages every day, okay?
Yep.
What do you see what does the future hold for the interest rate and the road we're going down, in your opinion?
Tough to say. And obviously my opinion, not, an official South State Bank projection, but, a lot of what I'm reading is, mortgage rates tend to correlate with inflation. And, hopefully we get this inflation thing, under control. We had some positive news about 10 days, 2 weeks ago.
And tell everybody what that is.
Yeah. So it kind of saw the first glimpse of inflation slowing. It's kind of tough because it compares year over year, but, they're starting to think that the actions the Fed has taken has started to rein it in a little bit, and that maybe the Fed will stop increasing, rates with the velocity that they have been. And so that gave some good consumer sentiment, but a lot of the data out there and projections, which again, never guaranteed, just projections, do have rates starting to come down anywhere between the next 6 and 24 months. And that's fairly universal. The Mortgage Bankers Association, Fannie Mae reports, Freddie Mac reports, a couple of chief economists from the larger banks, seems to be the consensus that we're going to start to trend down. Whether that's next month, 6 months, 12 months, remains to be seen, and kind of at what rate. But it's generally a feeling that we are at or near the top, and probably on the right side of the slope, so to speak.
Jules, it's funny. You talk about the reduction in the rates, and I think it caused the applications to increase, but you don't hear that. That doesn't. It didn't bleed, so it didn't lead. You know what I mean? First of all, I want to say thanks for joining us here on Voice for Real Estate. I totally enjoyed and enjoy doing this because it's about real estate. But I did want to end it with a personal question to you, if I may.
Sure.
Is I've always felt that raising children. And of course, I got the gray hair, so my children are older than yours. Our children don't do what we say. They do what we do. I know your father, I know him, and he's been responsible for doing some really nice developments in Mount Pleasant and around Charleston, and actually the Southeast a bit. But you lived your life with him when you were young. What did you take away from your household that you've been able to transcend to what you're doing right now, mortgages?
Yeah, my dad, and now I'd lump my son in with this too. My dad's my best friend. I hope to one day, be considered my son's best friend. And, one would just be work ethic, and kind of an entrepreneurial spirit. My dad, the entire time that we were growing up, never had a salary job. A lot of jobs in real estate, whether you're insurance, mortgage, real estate agent, or, closing attorney, those aren't salary jobs, right? So, going out and doing the right thing and having the right habits, and, always kind of preparing for a change, right? Everything in the real estate market or everything else in life is, really cycles, right? And there are going to be good times, there are going to be not so good times, but you got to just kind of keep, pointing back to earlier in our conversation, the integrity high, the honesty high, always try and do the right things. And man, I'm far from perfect in a lot of ways, but I hope that the lessons that I got from, my dad and mom growing up are making its way to my kids.
Well, I have to tell you, when I read your bio on South State Bank's website about you, and one of the words you used was integrity, the first person I thought about, honestly, for me, was your dad.
Wow, that's really cool.
So, so it's really cool. I appreciate South State Bank, giving you the time to help me do this. I definitely appreciate the time that you spent with us, and I look forward to other discussions about mortgages.
Yeah, such a pleasure. Thanks, Bill. Hope you have an awesome day.
You're welcome. Thanks, man, for being with us.
Absolutely.
Thanks for watching Voice for Real Estate, where you meet local experts who provide timely information in every episode. Be sure to subscribe, share, and comment. Find Voice for Real Estate online at voiceforrealestate.com.